this past week a bit of a level set in terms of expectations between investors and what the Fed has been trying to tell them for a while. Feels like this week they kind of opened up their eyes and said, oh, they're serious about this.
That's right. Yeah, that was really the message that came out. And I think what really triggered it was the consumer price index data that came out for January. Now, January data is always a little rough to interpret because you have all sorts of swings in the weather that can affect spending, price numbers, things like that. And then there's also certain changes that like the Bureau of Labor Statistics makes as far as how they smooth out the data. In order to compare data in January to July, they like to do seasonal adjustments, but they don't adjust for the weather. And January was an incredibly cold month, especially compared to December. So we had data on retail sales and then the consumer price index, and both of which were probably distorted by those swings in the temperature. But the market seemed to finally wake up and actually is beginning to see eye to eye with the Fed as far as what the path ahead is for rate cuts, meaning maybe it's going to be June, July for the first cut, and instead of 6, maybe something closer to 3.
Sure, because there was a period there where it seemed like the market was a little bit too optimistic, thinking that the Fed was on the doorstep of cutting rates. The trajectory sort of went like this. Inflation seems like it's coming down rapidly to the 2% target that the Fed has stated. And if that's happening, the Fed will want to re-accelerate the economy. How would we do that? We would reverse course on interest rates. They would start to cut interest rates and sort of seeing that into the future, thinking, gosh, that might be by March or so. Well, you know, the Fed has been fairly consistent in not painting that rosy of a picture in terms of the deceleration of inflation. And that data point seemed to indicate that they're more likely right than the market's expectations were.
I think a big question is whether or not that inflation number sort of resets the clock for the Fed in terms of how much confidence do they need in order to cut rates. And when Chair Powell was delivering his press conference after the most recent meeting, he said, we're confident, but we're not confident enough. And I find that a little troubling because this whole impressionistic, I'll know it when I see it approach to being like, oh, now we can start cutting, or now we need to start hiking, or whatever it is. I don't find a lot of comfort in that. But that is the path that the Fed is on, and they have consistently come out and said, no, we need a little bit more data. So if we get one bad inflation print, does that mean they have to now go 3 more months or 6 more months? Because we already had about 6 months of decent inflation data coming into that most recent CPI number. Most likely, Austin Goolsbee from the Federal Reserve Bank of Chicago, he said for him, this one bad data print isn't that big of a deal. He said, I'm actually expecting that we're going to get another bad data print just because that's the nature of the data. It's all over the place. He's like, but it's not going to undermine his confidence that they will be at a point, probably middle of the year, where they can start cutting rates. And I think a key thing for investors to consider is that it's not like in the past where they feel like they're going to be cutting rates because they have to in order to re-stimulate the economy. It's because they can, because the economy is doing okay and inflation is moving low enough that they can kind of take the foot off the brake a little bit.
Yeah, it's interesting. That's the soft landing. That's essentially that definition of that, which they're trying to accomplish. And if you think about it, if you were trying to land a plane, you wouldn't just slow down abruptly and wait until it slammed into the ground. As you're coming down, you would find that sort of sweet spot between acceleration and deceleration. And that's kind of what you're alluding to. Now, I do think it's a little bit interesting. You know, we talk about markets being forward-looking. As investors, we tend to be longer-term, forward-looking, macro thesis and trajectory. But the market reacted, at least on one day, pretty significantly. Well, okay, you have to remember the difference between short-term traders looking for that opportunity to see the market move pretty dramatically, as opposed to the difference between us as longer-term investors.
That's true. Yeah, the market does seem to be rather what we would call myopic, very nearsighted as far as just looking out what's going to happen at the next data release, the next FOMC meeting. But we do need to look out over that longer term. Now, let's kind of zoom out maybe 12 months as far as what is the market pricing in. And that's not even that long term for long-term investors, right? But if you kind of think about 12 months, what is the market pricing in for earnings growth for S&P 500 companies? That has moved from what we thought was kind of optimistic, 11% growth, to something a little bit more what we believe is realistic, closer to 9%. I'd actually like to see that come down a little bit more, maybe 7 to 8%, but it's at least heading in the right direction. So some of the maybe over-optimism, over-enthusiasm about the soft landing has been kind of priced out of the market to an extent, but we are still seeing plenty of great opportunities, but you do need to dig for them for that longer term growth. I mean, just to highlight a few of them, this past week when we were talking on the investment committee, finding opportunities in say like energy, just a lot of these companies are great cash cows, maybe small mid-cap companies that have been really overlooked because everybody has been too focused on like the Magnificent Seven and these mega cap tech stocks, or even outside of the United States, Europe. They actually went through a recession last year. Valuations there seem fairly attractive. So taking that longer view, it can be tough to do, especially with this 24-hour news cycle that we're in.